So let's classify out this trust. We'll start from scratch. And we'll work in with the profit and loss balance sheets. 2-year comparison. We won't bring any rules in. We're going to start from scratch as we mentioned. There's a trust, so we do need to bring in the profit distributions. Once again, this part of the system takes care of the line item naming. We've got to start from scratch here, and in this case we're starting right at the revenue side. So you can see obviously this is investment revenue. So the system's not catching the information well enough for us. We know that this is income from services. We're not so sure about the lease income. As we mentioned, that's probably other. And because we don't have a classification type for that, it's just other there. So interest is obviously interest. Fringe benefit adjustment is the fringe benefit. You need to know if it's a reimbursement or an adjustment. In this case, we know about this entity, so now we know that it's an adjustment. And then really it's a case of just, in this case, the system should have picked up what type of data this is and classified it all accordingly. But in this case it didn't, so we will do that bit ourselves. And we have got, so amortization, assets list, so we know that's depreciation, assets less than $1,000, we've got bank fees, we've got our amortization again, and we just need to come down if we're, you need to know what this is, other income, so it doesn't really matter which way you go. So this is gross income, so we've talked about that one. This is gross income, and this is also gross income. Facility fees. Okay, so it might be worth just working one step at a time, but it's up to you. You saw how I did that, and we talked about and we saw what was there, so that we know was a human input costs were direct. So consultants, and it's other consultants. So depreciation other, we don't know what type it is exactly. Fees, so this is some sort of fees and charges. You'd have to look to see if that was really big, to see if it had some sort of relationship with the revenue, but having had a look, I don't think it did. So you know that your regulatory filing fees, insurances, so we don't know what sort, sorry, insurances, as I said, we don't know what sort, interest, we don't know what sort, internet costs, so let's just finish off just sorting those out so that we can deal with them in a single run. Once again, this part I'll work with Mike to make sure that the system correctly puts everything to indirect costs unless it can tell otherwise. Especially if there's quite a few, it'll save you a few extra minutes. That's the whole purpose of this, is that we can read and see what stuff is. So we only had 2 extra ones there, and we might as well just go down to telecommunications. We don't know what sort, could be a combination of broadband and mobile. And once again, wages, salary and wages, doesn't say anything about associated persons. We can see we're there to the assets then. So just back again, and we'll work our through telecommunications, broadband, internet and computer software. Actually, that does say software there, so we don't know much more other than it's computer costs. So if you think it's computer costs, put it there. Obviously that's not a good mix. You can see not a good mix. Lease expenses, always try to know if that's going to be motor vehicle lease or not. Medical supplies, those are typically consumables. They're not in the game of selling product. They're using the stuff in the operation. So we're always thinking about what sort of business this is, and also classifying accordingly. So when we come to interest, well, motor vehicle interest, we should know that when we're doing this, it's interest, and if it is interest on a motor vehicle, we know they only had HPs, so that's what it must be. Now this tells us that the other lease is not motor vehicle lease, because we can see they've got a dedicated motor vehicle lease line on Reg and insurance. It's a combination, so we've got a combination account. So repairs and maintenance, sorry. So you can see if you make a mistake, just jump back. Very easy. Motor vehicle repairs and maintenance. Postage. Printing and stationery. Rates and taxes. So rates and taxes, we don't know what sort. Other rates and taxes. Rent. Repairs. Rubbish removal, we know is cleaning and rubbish removal. Security, we know security costs. Staff amenities, if you find that you need to pull that down like that to make life easier. So staff amenities, human resource costs. Once again, hard to know if this would be related to the direct cost, but we doubt that they'd be paying staff amenities significantly for contractors. Not a huge issue, it's a minor item. So the staff amenities there, staff training, also human resource, and that's staff training. Subscriptions, and it's other, because it's not a technical subscription. If you've got technical subscription to some sort of hosting service or some sort of software service, those are subscriptions like a QuickBooks subscription. We're now down to super, once again human resource costs, superannuation, and we don't know if it's probably, we can see super associated. So once again human resource costs, superannuation and associated persons. Telecommunications, so we did those ones, and now we're into the bank account stuff. So I'm just doing it like that when I see a whole range of bank accounts, trade debtors, so current assets receivable, net trade debtors, gross trade debtors. If you've got provisions in there, you've got to deal with those. Beneficiaries, current asset receivable, these are current loans, current assets, current loans, current assets, current loans. Okay, so made a mistake there, fix it. Current asset receivables, government taxes receivable, current asset receivable, government taxes, current asset receivable, government taxes receivable. Okay, so we know that we've got to just make sure that you sorted out all those. Trade debtors, the beneficiary, current unsecured loans to the related parties and their beneficiaries. Current unsecured loans to associated persons, and we know that they're beneficiaries. So this is Australian Tax Office. Okay, and it's got to be net GST for all of those. Net GST because it's GST payable, GST adjustment payable, input tax credits, so GST receivable and GST adjustment receivable. General pool, property, plant and equipment. So that is our general pool. Goodwill, intangible, sorry, not intangibles. So these are the prepayments, sorry, not prepayments, unexpired capitalized costs, preliminary expenses. The next one is borrowing costs, so also unexpired capitalized costs, borrowing expenses, current payables, trade payables, MasterCard current loans. Let's just assume that in general cases, loans unsecured, credit cards are unsecured, unless the debts get really, really big, unless it's some kind of business card that's been secured. Most of the time, they are unsecured. Okay, current hire purchases, and must bring these into the same account for them to work. Current loans, we know these are all current loans, and current unsecured loans from associated persons, and it's a beneficiary. So that's pretty easy to get that right. Current secured loans, current hire purchases, current secured loans, current hire purchases, current payables, and we can see PAYG, so that's got to be government taxes payable, Australian Tax Office payable, and PAYG from salary and wages, we know, current payables, current employee payables, superannuation payable. So we've got a loan here, so non-current loans, unsecured loans from associated persons, and it's got to be in a company. Current loans, and secured loans, current hire, non-current, yeah, so we've got that. Current loans, secured loans from hire purchase, settled sum, and these ones must have got missed. So accounting fees, bank charges, and when it's bank charges, merchant fees, bank charges, other. Donations, fees and charges, other fees and charges. So interest, we don't know what sort, so just other interest. And you're onto the last bit here, so current indirect costs. We've got journals and periodicals, current loans. These are all current loans, non-current loans, non-current loans. So you can go either way. Secured. And we're nearly there, so unsecured to associated persons, and it's associated companies. Oh, sorry, that's a current loans beneficiary. So be careful with that. Current unsecured loans from associates, associated trusts, beneficiary. So make sure you get that right. And we mentioned that's generally unsecured credit card accounts, secured credit card accounts, and you're done. So you can measure how long that was down there on the clock.